But Anuj Kumar from CAMS is here with us. Anuj, hi, good morning. Good to have you on the show. Just wanted to understand with the retail sentiment strong, SIPs now at record levels. Tell us how the overall demand and client confidence is looking like for you for the second half of the year.
Hi, good morning, and thanks for having me over on the show. I think from a fundamental level, the business is looking strong and poised for, I would say, similar growth trends that we've seen in the last 4 to 6 quarters. Overall, from the demand side, the retail investors continue to participate through the SIP formats. You've been watching the monthly collection figures released by AMFI month on month, which continue to grow by about 300 to 400 crores in successive months, are well in excess of 20,000 crore now. And at CAMS level, the SIP count registered, which is new customers coming in to register to opt in, are over 30 lakhs, almost 1 lakh a day. When you count all of this together, and then you see our business where we won all new to AMC clients last year, all three came into the fold of CAMS. We have about 75% share in net equity sales, which is a very strong foundational metric to see which way overall assets are heading. And combined with our investment in technology, talent, and overall, in risk and compliance kind of dimensions, I think we are poised for growth this year too. Of course, a lot will depend upon the market, but we are upbeat and bullish.
Mr. Kumar, we understand that RBI has granted you authorization for online payment aggregator CAMS Pay as well. And plus the street is expecting that you may actually go ahead and launch some new products around payment. Talk to us a little more about that. What are the kind of new products which you're kind of planning about?
So payments has been a very niche business. We have largely played in the financial services sector. Played largely with capital markets, both mutual funds and brokerages. That's about 50% of our franchise. The balance 50% is insurance companies and people who have loan books like housing finance companies. We are looking to now expand into education as one potential extra niche that could scale up the business. From a license perspective, this business back in 2021 was declared to be a licensed business. So that's think of it as more procedural. It does not add more dimensions to the business. But yes, we are moving forward to be both a payment aggregator and a payment gateway. And you will see some build out of opportunity in the education space.
Yeah, but what could be the contribution from the overall non-MF business, given the kind of forays that you're making into other businesses? What is the entire potential, let's say, 18 to 24 months out?
So for this year, last year, you saw that we grew non-MF about 50% plus. Of course, it was stratospheric growth riding on a few reasons. This year, we are banking on non-MF to grow about 30%. So you could see this grow about 40 to 50% in an 18-month time period. But I think the more important thing is that from a financial sector participant perspective, we are now strongly focused on the capital markets through MFRTA, alternatives, and KRA. But outside of that, through account aggregator, through our push on insurance, and all the business that Think360 brings in, I think we have a nice carve out of the non-capital markets business too. So it leads to some diversification, opening up of other segments, and therefore we are confident that in about 18 to 24 months, you could see about a 50% revenue up from current levels that you see on non-MF.
Right. So what are these new launches and the new product lines that you're talking about actually do to your margins overall blended? You're also talking about next 1 to 2 years, the product line or the offerings actually widen even more. Do your blended margins have scope to go up from here?
Our blended at company level EBITDA margins are at about 45% now. And historically, if you see the last 4 years, they've grown by about 1% every year. Our expectation is that growth, that margin expansion in the EBITDA line of about 1% every year will continue for the next 3 to 4 years. There's a strong possibility. It is aided by the core business, which continues to scale. It is also aided by revenue build out in the non-MF businesses, where we are kind of ending the cycle where we were investing in platforms. So the platforms are built. And now whatever cost it takes to build out the go-to-market, that will continue. But we expect non-MF, revenue contribution, like I said, to be in the range of 30% annually. For overall margins at company level to expand by about 1% on the EBITDA line every year for the next 2 to 3 years.
Anuj, so you're expecting a 1% gain on the EBITDA line every year for the next 2 to 3 years, but what kind of top line growth do you envisage?
This year, like last year, we grew top line company wide at about 24%. Our expectation is that we should be in excess of 20% this year. A lot of that is just the base growth effect of last year because the MF business and non-MF expanded almost quarter to quarter last year. On a longer scale, on a 3 to 4 year scale, we expect to be growing revenue about 15 to 16% in a sustained manner. Of course, market tailwinds and a lot that happens in the capital markets will continue to impinge upon how we grow. But at a broad level, you could think of a 15 to 16% revenue growth in the next 4 years.
And Anuj, before I let you go, I remember in FY23 or rather FY24 now, you managed to get on 3 AMC mandates, Angel One, Taurus as well as Unify. Any more in the pipeline right now? And the Gift City RTA work that you had started, how's that picking up?
So from a new MF perspective, the number of applicants has gone down significantly. This read as about 10 plus at one point in time. Most of them have got their in-principle approval, so those mandates are in the bag. There are 1 or 2 large ones still out there waiting for the license, and we are very hopeful of winning most of the new ones that come in, but they're not too many. They're just about 1 or 2. From a Gift City perspective, we have spoken about expansion of office space and headcount, so we are doing that. We should be inaugurating our office, the new office, in the month of August. We are servicing about 17 Gift City clients now, and we expect, at least we are seeing the first signs that we should be able to double this count in the next 12 to 18 months.
All right, Anuj, we'll let you go on that one. Thanks so much for joining us with your thoughts on the way business is shaping up right now.